What is going on, guys? It is Sunday, May 21st, and I'm going to give you guys my weekly market update where I go over the market and I kind of give you my expectations for the market for this upcoming week. So let's get right into it. What I like to analyze first is the QQQ, which is the Qs. This is the tracking ETF for the NASDAQ, which is the top 100 tech companies. And I first always like to start out looking at the monthly chart. I like looking at the higher time frames. And ultimately, I am practicing multiple time frame analysis, which I encourage you guys to do the same. When you guys look at several different time frames, you get a better perspective on what's going on with that stock or what's going on with the market than just looking at one time frame. Okay, so make sure you're looking at several time frames in your analysis so you can get the perspective of how it's trending, what's currently going on, is it bullish, is it bearish, how much momentum does it have, etc. So looking at the monthly chart, we can see that the COVID drop was right here, and really after about 2 or 3 months, we ended up continuing this uptrend on the Qs that has lasted since 2008, which is the financial crisis. So as soon as COVID hit, 2, 3 months later, we continue this uptrend, and we actually, we kind of become a little bit extended from the 20-day moving average, which led to this drop. So we had a really significant move, on the monthly chart, moving up, especially in the Qs, which led to this pull-in that started really happening December of 2021. So that's where the market topped. And since then, we've kind of been sideways. We dropped around, let's see, 35%. And finally, in the last 3 to 4 months, we started to make a move higher. And something that I'm really looking at is this monthly 1, 2, 3 setup, which is right here. And if you guys don't know, a 1, 2, 3 setup is when you have an igniting candlestick, a resting candlestick that kind of, lets the stock or lets the market kind of relax and chill for a bit before it continues higher with the third candlestick, which is the triggering bar. And that's exactly what we have right here. We have this igniting candlestick, resting bar, and the third candlestick actually triggers this 1, 2, 3. And something that I'm really going to be looking for when it comes to the monthly chart on the Qs is the 20-day moving average. Right now, this blue line, that's the 20-day moving average. Right now, it is still trending lower. And that's not something that I want to see if I'm going to be bullish on the Qs. You could see that during this uptrend on the Qs, basically since 2008, you could see how well price is respecting this rising 20-day moving average. And the 20-day moving average serves as a directional guide and kind of like a area of support or resistance for a stock or for the market or for a crypto. So you could see how well price is respecting the 20-day moving average every time it touches it or gets near it. Even during COVID, as soon as we broke under the 20-day moving average, we immediately shot right back up and we continued the uptrend. So you can see how well the market respects the 20-day moving average. And it's not just the market, stocks, crypto, they all respect the 20-day moving average. And that is part of the reason why I personally use it in my trading every single day. But something that I'm going to be watching for when it comes to the monthly chart on the market is for this 20-day moving average to start trending higher and curling under price. That is what we need. When the 20-day moving average is trending higher and under price, that's when we see price action respect it. So that's what I'm kind of looking for. So I really need this 20-day moving average to start curling higher. And I have a feeling that it's, you can kind of see that starting to a little bit, right? So if this starts to curl higher, I can expect maybe June to be kind of a slow month where we chop around a bit. But hopefully, if this can start to curl up by July, by August, we can really start to move up and break out and potentially test the highs by next year. Okay, now let's take a look at the weekly chart. So we're going to go to a lower time frame, the weekly chart. Let's analyze this real quick. So this was the COVID drop. It dropped right into the 200-day moving average right here. Okay, as soon as it touched the 20 or got close to it, jumped right back up, and we continued this weekly uptrend. Check out the 20-day moving average on the weekly chart as well, how well price respects it. I mean, every time price touches the 20-day moving average, we get a move higher, right? Even when it started to top out and it transitioned into a downtrend, right? We drop, retrace the 20-day moving average, drop, retrace to, we broke the 20, but as soon as we broke it, we came right back in, retrace the 20-day moving average. Then we seem to bottom right here at 259 on the Qs. So we form a low right here. And right after that, we could see the 20-day moving average starts to curl under price and curl higher, start to trend higher. And we form a higher low right here. And since that higher low, we broke out and we have been basing near the highs until this previous week where we broke out again. And this was the candlestick of the previous week that I'm talking about. And you can see the 20-day moving average is under price and it's also trending higher. Whenever prices and stocks tend to transition into higher prices, we want to see that 20-day moving average curl under price, acting as support for the stock and also curl higher and trend higher. So weekly chart, extremely bullish on the Qs, extremely bullish. In fact, we even broke this previous pivot and resistance level. We are a little bit extended, and by extended, I mean, there's some distance between price and the 20-day moving average. That's how I measure whether a stock or crypto or the market is overbought or oversold. I look how far it is away from the 20-day moving average, because stocks that tend to, really rally and go up, 100, 200% to the point where there's significant distance between price and the 20-day moving average, it tends to pull in, right? So whenever I see prices really overbought and extended from that 20-day moving average, my bias is I'm looking to short or I'm looking for a pullback or a reversal, okay? So we do have some extension on the weekly chart. Still really, really extremely bullish on the weekly chart. Looking at the daily chart, we could see that extension a little bit more evidently. You could see this is where we had this higher low on the weekly chart. This is it represented on the daily. And yeah, we made a move higher. As you can see, the 20-day moving average is under price, curling higher. Really good sign. Really bullish on the daily. Really bullish on the weekly as well. But we do have some extension between price and the 20-day moving average. And we also have a narrow ranged bar. So, and the reason that's significant is whenever we have a, really large move higher, let's kind of paint the diagram here. Really, really large move higher, and then we get a resting bar. And of course, let's paint the 20-day moving average here. Let's say the 20-day moving average looks like this, right? We're clearly extended from the 20. We could use this narrow range bar as an entry short where we enter below the narrow range bar and put our stop loss above it. And the whole idea of this is that price is extended. There's significant distance between price and the 20-day moving average. So, whenever you see that, you should kind of maybe expect a shorting opportunity or maybe a reversal or a pullback. So that's kind of what I'm eyeing here. Not to say that I'm going to short this. However, I would anticipate either a gap down on Monday, which is tomorrow, or some sort of retracement because we are extended. So I am expecting some sort of pullback come next week. However, maybe this ends up pulling back, right? Pulling back. 20-day moving average continues to curl higher, and then we get a potential buy setup where we continue higher from there, or a breakout or something like that. Okay? So in summary, the Qs extremely bullish on both the daily and the weekly charts. We are a little bit extended, and that's the reason why I'm expecting a slight pullback or maybe even a gap down on Monday, just so we could kind of compensate for that extension. However, on the monthly chart, things are a little bit more confusing. We have triggered a 1, 2, 3. However, the 20-day moving average is still not below and underpriced, curling higher, so we still have to wait for that to happen. But as of right now, I am 99% bullish on the Qs and on the overall market as well. If we take a look at the S&P 500, which is the SPY, it's basically the same stuff, right? The only thing is the SPY is just a little bit less bullish than the Qs, right? You could see that 1, 2, 3 has triggered on the monthly, on the SPY as well. The 20-day moving average is flat, okay, so still not trending and curling higher. When it comes to the weekly chart, we could see that really the same thing has occurred. We've exited this downtrend. We've created higher lows right here. The 20-day moving average is underpriced, curling higher, and you could see the price is slowly starting to transition higher. It hasn't quite broken out yet like the Qs have. We also have resistance right above here, but still this is gearing for a breakout on the S&P 500 as well. So really encouraging to see here, and you could see how well price is also respecting the 20 during these recent weeks. Then moving on to the daily, like I said before, we're not quite as bullish on the SPY as we are on the Qs. However, we're breaking out on the daily. We are breaking out on the daily, so really encouraging sign. So same thing with the S&P 500. The only difference is it is slightly less bullish than the Qs. However, I am 99% confident that we are currently bullish, and right now I'm full. I have a bullish bias on the market until I'm proven otherwise, right? If some big event happens and we start to really drop, then I'm going to change my bias. However, right now I'm 99% bullish on the market. And for all those people out there who are predicting a market crash, who are saying that, oh, the market's going to collapse any minute now, any day now. Well, to be honest, they're probably just doing that for clout, for views, for attention, because just looking at the price action, just looking at the facts that are on the chart and objectively reading price action, it's bullish. There's no other way around it. We are extremely bullish. The one difficulty that I have with the market really starting to soar higher and potentially challenge the highs is the IWM, which is another ETF mostly for lower cap stocks. And if you look at the IWM on the daily chart, we are kind of sideways. We are not trending higher. We're not really breaking out. So overall, the IWM, especially if you look at the weekly chart, we're sideways. We're not necessarily bullish. There's really no trend on the IWM. So this is the one challenge. And my question is the market going to rally with the IWM being this weak and sideways and just, kind of lacking momentum? So that's something to watch. However, it's undeniable that the Qs and the SPY are extremely bullish. And going into next week, I am expecting a gap down or some sort of retracement lower. However, I'm still bullish moving into this summer. Hopefully this class was super helpful. And if you guys want to see me analyze the market every single morning before it opens and see the way that I create my morning watch list every single morning and how to pick the stocks that I'm looking at for the market open, then definitely check out my private room below. I do classes every single morning before the market opens, and I'd love to see you guys there. Have a good day, everyone. Thanks for watching this video.